It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, June 15th, 2015. Get a special quadruple witching FOMC meeting edition of our nightly newsletter, the only newsletter for this third week of the, the 6th month of the year, right? Month of June. Got a quadruple witching week in front of us here. You know what that means. We're going to be ready for everything here this week. We're going to dig right into it here. We also got FOMC on Wednesday. Everybody's talking about rate cuts or rate hikes well, if you're wondering why gold's pretty sideways right now, that's exactly what's happening to gold right now. Before we get into it, though, I got a jam-packed newsletter in store for you guys and gals. Please remember, everything we're going to talk about tonight, I teach to all of our students at SchoolOfTrade.com. Please make sure you check out the free trial over at SchoolOfTrade.com. You will not be disappointed. I'll talk about that towards the end of the video tonight. Also, please make sure you're watching this video on our trading blog. Sidewaysmarkets.com is the web address. There are 3 reasons why you should navigate over if you're watching this video on our YouTube page right now. There's a link right in the description of the video. 1, you can download all of my charts for tonight's video. There's a conveniently located link right below the video that'll allow you to download all the charts you can use on your own time. Every chart that you see me using tonight in the video, you can download below the video. 2, grab a free pass to attend our live trade room. If you're not a member of School of Trade and you'd like to have a free pass, come out and attend our live trade room in the afternoon. I'd be more than happy to give you guys a free pass if you're not a member yet. And of course, number 3, nightly newsletter. We have a mailing list. All I need is your name and your email address, and I'll send you an email every evening, usually Monday through Thursday. This will be a holiday shortened edition for this week. It's a trader's holiday on Friday, so this will be the only newsletter for this week, but Monday through Thursday at around 8 p.m. Eastern Time, I'll send you an email under most situations when that nightly newsletter is available to you. Now, guys, if you grab the free pass or if you register for the nightly newsletter mailing list, please make sure you check your inbox. Check your spam folders, your junk folders. I'm going to send you a verification email to make sure you give me approval to keep sending you emails in the future. So track down that verification email. Really quickly here, looking at the news ahead of us here this week, the week of June 15th to the 19th. Don't forget, this is the quadruple witching week. The months of March, June, September, and December, those are going to be the end of each quarter. This is now the end of the second quarter here in the trading calendar or the fiscal year for most people. And of course, we're looking at the 1, 2, and 3rd week. The 3rd Friday is Quadruple Witching Friday. Now, I'm going to put a link right below this video tonight where you can learn more about Quadruple Witching. But what you want to be aware of is during this time of year, we have that self-fulfilling prophecy that kicks in, right? If you haven't heard about this yet, basically people understand that Quadruple Witching is when all 4 different asset classes, it's 1 more than we get usually on triple witching, which is OPEX Friday, the 3rd Friday of every 1 month. So the 3rd Friday of every 3 months is quadruple witching. And of course, what happens is professional traders, they purposely avoid the marketplace during this time. And of course, speculators and day traders like you and I, we of course know that. So we avoid that time in the markets. And of course, it snowballs and creates well, it's not the whole week. It's going to be Monday, Tuesday this week are going to be the best opportunities for you. But then, as if we need a little bit more to worry about this week, we throw in the FOMC meeting announcement on 2 o'clock. Now, in all reality, this FOMC meeting announcement might just be one of the most important we've had in quite some time because unless you've been living under a rock the past few years, everybody is talking about interest rates. Are they going to raise the rates? Are they going to keep them the way they are? Right? We did this whole quantitative easing thing, right? Drop the interest rates to get the economy back on track. And well, we've seen many signs of a successful recovery of the economy. In fact, this week, housing started to really show some traction this week. But we know it's been a little bit herky-jerky on housing the past year and a half. But, you know, we know that according to our gal, Janet Yellen, everything is data dependent, and we don't really know yet I'll tell you, if I had to guess right now, I would say they keep rates pretty much right as it is until 2016. But I don't make that decision. And of course, if you ask 100 people, you'll get 100 different answers. And well, as you can imagine, that FOMC report is definitely going to throw a wrench into that quadruple witching week. We already know there's going to be low volume because of quad witching. Then throw in our gal Yellen and the crew at the FOMC, and well, now you see why I'll be out of here the rest of the week. So bottom line is, I always plan to take some time away from my desk during this quadruple witching week. You can learn more about them. Remember, third week of March, third week of June, third week of September, and third week of December. Make sure you understand the situation we're in. And this one is, again, it's got a little bit of cayenne pepper on this one because it's got that FOMC announcement smack right in the middle. And if you're a crude trader, you got rollover and inventories coming up here this week, right? We're going to have rollover on the 18th for crude oil. We got inventories on Wednesday. Just sounds like I'd be better off sitting getting a root canal Wednesday, Thursday, Friday, right, than trying to see consistency in the price action. That's why we call it a trader's holiday. So kids at home, make sure you mark your calendars the third week of every 3 months. And I always tell my clients, use this time productively. Use this time productively, right? So what my personal strategy always is to use this time away from the markets to spend time with family and friends that I've been putting off for the past 2.5 months, right? We work very hard, right, for the months of April, May, and the first 2 weeks of June, and then take some time off. It's important that we spend some time away from the computer, right? Get that dentist appointment out of the way. Get all the stuff that you've been putting off for the past few months out of the way. Because when we come back the beginning of next week, when the rubber hits the road again next week, it's off at the races again for a few months of consistent trading. So these are the times when someone like me says, take a break a little bit. And if you're brand new to the markets, I know it's difficult to stop. So I would recommend use some market replay. Take some time to invest in your education. We have a great product here at SchoolOfTrade. You can learn everything you need about how we trade. So use your time wisely Wednesday, Thursday, Friday this week. Don't force it this week because you're literally swimming against the stream right now. The entire financial market, the entire world right now is going to be sitting on hands Wednesday, Thursday, and Friday until we see more of what's happening. So that's the scenario here we're dealing with right now. Tomorrow the meeting begins. Again, last newsletter of the week here for me. First and last of the week here for me. But again, you know why, right? It's not because I got my feet up on the desk. I'm going to be spending my time, like I encourage you, constructively, right? Outside of the office, getting personal stuff done. So when I come back, I'll be ready to rock and roll with you guys. And I hope you guys will take my advice on that. Now, can we get to some charts, Joe? Can we get to some charts? Enough of the hoopla about quadruple witching. Let's jump right in here. Now remember, we're looking at these going into the rest of the week here. So I try to keep a little bit longer term approach to this so you guys have some levels the rest of the week here. But again, though, careful after Tuesday night. Let's see here. Euro, we're trading clearly sideways. Now keep in mind, Euro rolled over. Not gold, but the S&P rolled over. So all the currency futures, all the E-minis now are on the 915 contract. Be aware of that. Be aware of that. If you're wondering why the market wasn't moving very well this morning, it was because the markets rolled over on Friday. Euro is trading sideways on the 915 contract today. Our plan is to sell the highs and buy the lows of the range using failure patterns. And our profit targets will be back at the 200 moving average, which is right about that 1262 area at this time. And of course, the opposite side of the range. So the reality is we do have a long-term bullish bias to this trading range. So if you did want to default to one side or the other, it would be at the buyer side. Looking at this chart, though, it's really difficult to say we have some sort of bias right now. It's a really long-term bias. So I'm not too sure how much you want to rely on that bias here. I would stay focused on buying lows and selling highs, and try to stay away from trading around this moving average. This is the 200 moving average in a slower time frame, like this is a 16 anchor chart here for the euro. Pretty slow time frame for the euro. You can see we're covering quite a bit of time here at the bottom. Now, when you see a market like this, the easiest giveaway is the moving average. You can see it just flat as a board right there. Lack of new highs, lack of new lows. Now, I would call this a consolidating market, but it really is nothing more than a bunch of ranges inside of ranges, right? So you get the major range. There's your major range. Sell those highs, buy those lows. Tough to tell if we're going to get there right now, because remember, the euro is going to be another one of those markets that is dramatically impacted by everybody that's waiting on the Fed announcement on Wednesday because of the dollar, right? Remember, the dollar index is a group of currencies. It's a basket of currencies, and over 60% of that basket is euro. So when the dollar moves, the euro has to move. It's just kind of the way it works, right? It's a fundamental negative correlation, whether we agree with it or not, or like it or not. It's the way the markets move. So we know that euro, along with gold, which we'll talk about in a moment, they're going to be affected by this pending news, right? People are not going to want to take large positions on euro, knowing the dollar could be affected, or gold, knowing the dollar will, not could, but will be affected by what happens on Wednesday. Not so much on Friday. Again, that FOMC announcement. Most of the time, FOMC announcements aren't going to be that big of a deal, but this week it's that everyone's itching to hear about rates, and we've been hearing about June for the last year about increasing rates. So again, euro a little bit sluggish. Then we have this smaller range you can see here. This is a little bit easier to see, right? They're pretty easy there, right? So again, sell highs, buy lows. Now, what's the best way to do this? What's the best way to sell the highs? Well, there's a couple different ways you can sell the highs. There are actually 3 ways you can buy lows and sell highs. What's the first one? The first one is reversal pattern. So look for a reversal pattern as the price goes up to this high. Trend line, swing, right? Reversal pattern. That's one. What's another one? Another one would be, my personal favorite, is going to be when price gets to this area, look for buyers coming in, sell right into where their stops will be placed. It will, now this drawing, this illustration, this crude 6-year-old like drawing that I've got here looks very similar to a reversal pattern, but they're significantly different, right? If you're a student of mine, we're looking for buyer failure at the high. We're looking for seller failure at the low, right? The key is look for the buyers to try on a pullback pattern to buy those highs, and you know where their stops are going to be. Put yourself in their shoes, have some empathy, right? And sell right into those stops or buy into those stops at the low. What's the third one? The third one is where, and this is going to be a little more conservative, but this is where you're going to wait for price to get up there, and then as it starts coming down, then you're selling retracements, wave pattern short off the high, right? Or goes lower, you're buying pullbacks, wave patterns long, right? Up off those lows. So the 3 ways to trade those failures are going to be reversal patterns of the highs and lows, failed buy patterns of the highs, fail sell patterns of the lows, and don't forget, it's the wait for the turn and then trade it back in. One thing you do want to, there's really 2 things you really don't want to do right now in this type of environment. You don't want to be trading near this yellow line right in the middle of the range. You don't want to be trading there. The second thing is you don't want to be trying to buy the highs or sell the lows. In this environment, you want to fade all the breakouts. What that means is you want to be extremely suspicious at the highs and the lows of these major ranges or any of the resistance areas overhead. Look for failures there. Support levels below. Look for failures there. All right? We'll be trading this tomorrow morning in real time in our trade room, so don't forget, come out and see us. Okay, our trade room is open all week for our members here in the morning, so please come and join us here if you need more help in the real-time environment on the euro. How about some crude? Let's keep going. Now, crude oil, like I said earlier, crude's going to be a challenging market this week. Again, there's a reason why I call this a trader's holiday week. It really is. And this is a week where we have the FOMC meeting on Wednesday, we have inventories on Wednesday, and we have rollover Thursday, Friday-ish this week. They say right now we're being told it's going to be the 18th of this week, which of course today's the 15th, so do the math, right? Thursday, Friday, later on this week, we should see rollover. Remember, look at the volume and start trading the 8.15 contract of crude oil once the volume rolls, right? And the volume is greater on the 8.15 compared to the 7.15. Don't worry about expiration. This is nowhere near expiration. You're not going to get a barrel of crude oil delivered to your home, but you want to make sure you're watching that volume towards the end of the week this week, right? Thursday and Friday. This is nothing too difficult, right? You can usually set your clock the 18th of the month, and you're going to get rollover pretty much every month like clockwork. Now, with that contract rollover reminder, how are we doing here on this? Crude oil, bearish, but oversold. Here's a great example. We had a short-term channel. Remember this from last week, right? There was your spike. There was your channel. Remember this from last Friday, right? We talked about this last Thursday night's newsletter, and we said, what's going to attract a bull, right? And some of you gave me some really great answers on my YouTube page. That was great. Lower prices, right? So price has to push lower. So we pretty much nailed that right on the head last week, right? Thursday, Friday. Everything plays out according to plan. And again, with the spike, this is a flag pattern, not a spike in channel. This is a flag. We know there is potential here. This market finishes the move all the way back down to, let's say, 58, 57.91, right? That's where the beginning of the flag, that's where the flagpole started, right? Okay, so you can see here a couple examples here of flags, right? These are all flag patterns here. Jumps up, flag, jumps up, flag. And again, usually it's going to pull back a little bit further, and if it collapses, it's going to go right back to where the flagpole began. Again, go back to last Thursday's newsletter, and you'll see a full tutorial on how we trade those. Sellers. What we did was we saw this price collapse, and you'll notice I kept the bear channel in play here, but I went down and lined up another trend line down here. Now we have a multi-tiered channel. Notice how I did that? I didn't go looking for it more aggressively like this, because this really doesn't accomplish. I mean, you can do it, but the way that I always think of it is drop a rock in a puddle, and where does the splash go? And you can see, right? So it doesn't really fit very well. You drop the rock in the puddle, right? Here's where you drop the rock. The splash goes from here. Stay focused on this area up here and then extend out from there. We teach all this stuff to our students here at School of Trade. So remember, you're not alone out there. You might be alone watching the video right now, but we got your back here at School of Trade to teach you guys all the fundamentals of this stuff. So bottom line is we're definitely bearish. Sellers want to wait patiently for the best opportunities up near the resistance levels overhead, and the buyers will be looking for short-term opportunities at resistance levels. So pretty much standard operating procedure right now. I'm looking for selling opportunities at the red lines and the red boxes overhead. I can use a reversal pattern to do that. I can use a failed buying pattern to do that. I can wait for price to roll over and then sell as it's coming lower. So I'm definitely looking for selling opportunities at all of these areas posted overhead. What if you're a buyer right now, right? If you're a bull right now, you might be thinking, but man, $60 a barrel, it's right next to the 200 moving average. It puts me back up towards the highs. Big drops usually means big pops. Could I be a buyer here right now? Well, if you're going to be a buyer here right now, you don't have much room for it. You're right at that midline of that multi-tier channel, okay, which was previously the low of that channel. So you really got to be careful. And remember what I always say, how do you want to buy in a downtrend? If you're going to be a bull in a downtrend right now, what are you going to look for? Look for short-term resistance areas, look for sellers trying to sell short, and then buy right into where their stops would be. That's the best way to get long right now. Use a nice tight first target. Take that first target, move that stop up, lock out the risk, lock in a quick reward, and then see how far you can take it. Just be sure, though, don't get greedy on the way back up. Remember, if you're going to counter trend trade, it's got to start as a scalp before proven otherwise, right? It's a scalp until proven otherwise. Leave a portion of it to run, but be conservative here if you're going to be a buyer right now. And I would say $60 a barrel is a reasonable target. As you can see, though, it's only about 40 cents north of here right now. So you really don't have a lot of opportunity here to be a bull right now. Best bet right now is to be a bear. Wait patiently for price to either move up into these areas, or if it rolls over, just get to it quickly here before it gets down to those range lows again. I would definitely be looking, though, here ahead of Wednesday, be looking for that price to get up into this area here before we get a quick little sell-off here as that news comes out ahead of FOMC and inventories on Wednesday. We'll be trading crude oil tomorrow in our live trade room. How about the S&P? Should we move to the E-mini, the ES? Well, first of all, we're trading the 915 contract. We did roll over on the ES along with all the other E-mini markets right now. Most important thing you want to be seeing here right now, boy, we have played this market like a fiddle. Overshot the low early last week. That gave us just easy trading back up to the overshoot high. Fish in a barrel. And then we get back up to the highs, and we talked about this last week, right? Spike. Remember last Thursday night? Spike. Flag. Well, we never get the flag. My exact words were this time last Thursday, if it collapses, you know where it's going. It's going right back to the flagpole. And that's exactly what we had happen, right? There's your bull flag. And again, I said on last Thursday night's newsletter, I said, be aware. If you see the flag, keep on trading that well-behaved, sluggish channel that forms with the flag. But if it fails, be ready for this price to collapse back down to where they stuck the flag in the ground, right? Why? Because big pops, big drops. And again, that flagpole tells us that all the bulls were committed. The only way for it to keep going higher was for those bulls to take their profit. They took their profit. There wasn't anything to hold it up, and it just collapsed. So here we go. S&P's bearish after collapsing off the highs last week. I know, right? Got the fiddle out, playing this thing like a fiddle right now. Awesome job over the past week and a half to run the ES. Our plan is to look for selling opportunities at resistance levels overhead. And see the little gap right there? Now, if you look closely on this, and I checked a couple different charts, I reloaded my data a few times, I couldn't get that gap to fill. That's very close, but not close enough. Close, in my opinion, is in count and day trading. Only counts in horseshoes and hand grenades and maybe paying your taxes. I'm just kidding with you. But the reality is we have a gap right now. And that gaps love to get filled. Gaps are unfinished business. And because the market participants are so curious, right? Another way of saying price exploration, we're always trying to find areas that haven't been tested before, right? Naked areas. Right now, we have a gap resistance area right now. Now, we're definitely looking a little bit sideways-ish right now. You'll notice we didn't make a new low here. So we're definitely seeing this thing flatten out here. I would very, very, very carefully here very, very important, do not sell these lows because this may end up being nothing more than one big range here. So whatever you do, don't sell these lows right now. That's the one thing I can tell you I wouldn't recommend is trying to sell those lows here. We're going into FOMC. We're going into quad witching. Volume's going to get a little bit lower here as the week progresses. But again, I would expect price to get up to that gap, up to that 200 moving average, and then we'll look for selling opportunities back down. Up into resistance, selling opportunities back down. Up into resistance, selling opportunities back down. Again, really the only thing I can't recommend here is going anywhere near those lows just because we weren't even able to retest that low here. If we do roll over without filling that gap, that's going to tell you how bearish this market is right now. And again, it's okay to sell near those lows, but wait till it gets up off that low and then look for that retracement pattern getting short. We got support levels down below us here marked up. We get some measured move targets waiting for you later on this week. Again, you know the plan here. We're bearish. I would expect this gap to be tested before we make the move lower. If we don't, it just throws more fuel on the fire for the sellers, knowing that that gap was pretty much ignored, and we will continue here. Now, don't delete that gap off your charts, though. Trust me, those gaps have a funny way of getting filled somehow in the future. So we definitely expect the gap to get filled. Will it be tomorrow? Well, we'll have to wait and see here tomorrow. Don't forget, we'll be trading this market tomorrow morning live in real time in our trade room. And how about we wrap up with the most exciting market of the week? That was me being sarcastic. Mr. Gold, boy, someone needs to light a fire under the rear end of this market. No surprise, though. Again, we got FOMC, we got quadruple witching. You know, gold's a market that is highly susceptible to an FOMC report, especially one as anticipatedly important as this one. And again, it may be nothing at all here. If you want my opinion, I don't think they can do anything for this report, for this announcement on Wednesday from the FOMC. I think we've seen too much of mixed news. I don't think they're going to risk the progress they're making in Europe right now, I just don't see it. But I mean, again, the last time Janet Yellen called I'm kidding with you, but they don't ask for my opinion. So the bottom line is it's all variable. All question marks here for Wednesday, and that's exactly why gold's going to be so sideways, directly affected by the dollar, and whatever happens on Wednesday's FOMC announcement will directly affect gold. So gold's going to be a little bit sloppy. No rollover in store here or in the future here for gold. We just did it last month, but gold is bearish. We're trading sideways as it tries to retest the lows. Remember, gold is still trying to retest these lows here right now. Gold is still trying to get down to retest those lows at 62.7 here right now. So remember the plan here for all you gold traders. We are still bearish. We're just going sideways. So mark up the highs and lows of that range right now. And your goal, sellers, you'll keep looking for opportunities to sell up at resistance levels. And this sideways movement we're seeing right now tells us to look for fake breaks. Look for fake out breakouts at those highs. So we go up, we sell it back down. We go up, we sell it back down. Now, if you're a buyer right now, your only hope right now is try to capitalize on this measured move back up around this 1200. We may end up seeing Wednesday morning gold back at 1200 just because of this FOMC announcement coming our way. So expect low volume. Really difficult to be a buyer right now, I'll tell you that much. I mean, we get a lot of resistance overhead, and really the only place you want to be buying is going to be down around this trend line. That's really the only place that you're going to want to be a buyer down here. So just be careful trying to buy directly into these resistance areas. Remember what I always say, if you're going to trade counter trend, it has to be a scalp until proven otherwise. So take the profit quickly. If you're going to be a buyer right now, don't buy into resistance areas overhead. Use those resistance as profit targets. And I'd have my money on 1200. You got that measured move up there at 1201.6. That would be a definite measured move target for you bulls out there. But again, my point of view. We're bearish here on the GC, so we'll definitely continue to look for selling opportunities. And I think the best opportunities here on gold are going to be fading those breaks, right? Looking for failures up at those highs right now, and then taking profit in our support levels marked up below. Again, right now the sellers are eyeing that low, 62.7 right now, to finish that move off after we broke the high of that bear channel, and then we'll see where it goes as far as support levels go from there. Keep selling those retracements on gold. Again, though, I would be careful here on this market. This is one of those markets. This market and the euro, I would fade all breakouts right now, which means sell those highs, buy those lows, with a bias to the bearish side right now here on the GC. Guys and gals, great job today. Great job today. It's going to be a little bit herky-jerky the rest of the week here, so make sure you use your time wisely. Don't forget Wednesday's FOMC, Friday's quad witching. If you want to know my opinion, it's 3 days off here, Wednesday, Thursday, and Friday. Find a way to become more productive when you come back next week. I've got all kinds of ideas for our students here at School of Trade, and we'll be talking about those tomorrow in our trade room, so make sure you guys come out and see us. Also, got some free time on your hands? Grab a copy of our free trial. Register for the free trial here at SchoolOfTrade.com. If you're looking for something to do during this Traders Holiday, we got beginners, intermediate, and advanced levels of membership, and always someone standing by here 24/7, 365 to answer your question. I'll be out of here the rest of the week in the afternoons. I will be at my desk all week in the mornings, but I won't be trading the afternoon sessions. Our trade room is open all week for anyone out there who wants to come out and earn and learn with us. My name is Joseph. Happy quadruple witching holiday to you guys and gals. You know the plan. Now execute that plan. Don't overthink this too much. Careful on Wednesday, Thursday, and Friday, especially later in the days. Wednesday, particularly around the FOMC announcement, and Fridays should be just nothing at all. So you really want to get out of that office on Friday morning. All right, guys, I'm out of here. I'll see you guys 1 week from today. That puts me at next Monday, June 22nd. Drop me an email, post me a comment below the video. Let me know how we're doing over here. I would love your feedback. And as always, be well out there. Be nice to each other. And make sure you follow the plan we've outlined for tonight. We'll see you guys in a week. Enjoy your break. Enjoy your break. I'll see you on the other side. Adios, amigos. Bye-bye for now.